The following is an update and technical analysis on Carnival Corporation, a company of the consumer cyclical sector and leisure, here off the 1 hour interval where I'd mentioned on the 16th of July 2023, we're trading spot price $17.31. And watch for a break of this minor reactionary low uptrend line off the June 2023 reactionary lows, which would signify a breakdown sell signal. And what was more imperative was putting in this nice clean divergent high with 2 out of the 3 momentum indicator negative divergence on the oscillator and relative strength index. But was even more turning. What the biggest turning point was based upon this 1938 price resistance. Up above was the near-term exaggerated divergence, really amongst all 3 key technical momentum indicators, and that was met with a wave of selling right off the breakdown off that key inflection point. Really took out that which was the 50 exponential hourly moving average in the minor primary uptrend line, and the entire trade thus far is good for 12.5% crash there, and we are sinking below some very critical volume profile zones, whereas we had this, which was the primary major price support level off the April reactionary lows, just a continuous reaction right across that sphere, and that was broken down, put in a nice clean hourly sell signal close, back tested really to the button there, and just right off that key inflection point, which could have been darn near a double digit. Leverage up your trade on a breakdown of that major price support level. And here we are, just trading slightly below the 1598 price resistance and honing in onto the 382 fibs retracement, call it 1533 price support, and then ultimately the 1504 price support down below. If we snap that level, if we crack that level, then we're going to more than likely hone in onto the top of the gap, coinciding with that reactionary low down to the 50% fibs retracement, call it 1406 price support. And then ultimately, if we take that level out, a complete backfill of the gap here to 1312 price support there, and that entire trade would be good for a 26.5% crash. And just talk about the ton of longs and all the long traders that are trapped right up in this primary trading zone, which was the catalyst for a big breakdown there, and could have a more fluid, stronger, bigger wave of selling. And there are just really very few things in trading that compare to a captivating spectacle of a frenzied all-out rush for the exits.